Welcome back, everyone. We're kicking off Series 02 today with our very first lesson in this explainer, GAAP, what it is, why it exists, and how to use it correctly. Before we can get into the really complex financial statement stuff, we absolutely have to master the ground rules, right? So let's get right into it. Okay, let's dive into this. Here is our roadmap for today. We're going to start by answering what is GAAP. Then we'll look at the rule makers, explore the 2009 consolidation, cover the 3 core purposes, and finally discuss what making a formal commitment really means. So Section 1, what exactly is GAAP? The ultimate accounting rulebook. You know, whenever we look at the interconnected business world, there's this absolutely fundamental need for a unified language. Without it, business literally grinds to a halt. So what is this shared language? Well, it's GAAP, which stands for Generally Accepted Accounting Principles. Think of GAAP as the ultimate definitive rulebook. It's the complete set of rules, standards, and guidelines that companies here in the U.S. absolutely must follow when they put together their financial statements. It tells accountants exactly what to record, when to record it, how to measure it, and how to present it. The whole point is to make sure every company is speaking the exact same financial language. Imagine trying to do business before a unified rulebook existed. It was basically the Wild West. You had different companies using completely different methods to report the exact same things. I mean, investors couldn't trust the numbers, banks couldn't accurately assess risk, and auditors, well, they had no consistent standard to even check against. Comparing one company to another was just impossible. But with GAAP, suddenly everyone is speaking the same language. The numbers become totally comparable, and most importantly, they can be trusted by external users. GAAP is literally the heroic solution to that massive historical headache. It turns chaos into a clear, reliable financial landscape. All right, moving right along to Section 2, the rule makers. Who actually writes this rule book? If we all have to follow these rules, we really need to know who's holding the pen, right? In the US, that pen is held by the Financial Accounting Standards Board. Most of us just call them the FASB, pronounced FASB. Now, the FASB is an independent private sector organization, and they have exactly one job, just one: to develop and maintain accounting standards. So every single accounting rule you follow when prepping a financial statement, it comes directly from them. Now, what's really interesting about this ecosystem is that while the FASB are the definitive GAAP creators, there are a couple of other players you need to know about. Take the AICPA, for example, their professional accounting association. They put out some really useful guidance, sure, but remember, they are not the final authority. They don't set GAAP. Then you've got the SEC, the Securities and Exchange Commission. They regulate public companies, and they actually layer extra rules on top of GAAP for companies that trade on the stock exchanges. So the takeaway here, context is everything. While our P&G clients are mostly private, you always have to keep an eye out for any client prepping for a public offering. The moment that happens, those SEC rules kick right in. Which brings us to Section 3, the 2009 consolidation, going from complete chaos to absolute clarity. You know, things weren't always as organized as they are today. If you look back at the decades pre-2009, US GAAP was a total mess. It was scattered across hundreds of separate, confusing pronouncements. We had all these different statements, opinions, and bulletins just piled up over the years. Some rules outranked others, which meant relying on a lot of subjective judgment. And old standards were just completely tangled up with new ones. But then, cue the collective sigh of relief from accountants everywhere. 2009 happened. The FASB consolidated the whole thing into one beautifully organized library called the FASB Codification. Fast forward to today, and that codification is our single authoritative source of truth. It's black and white now. Everything inside the codification is equally authoritative. If it's outside, it's just reference material. Simple as that. Okay, let's jump into Section 4, the 3 core purposes, or essentially why GAAP even exists in the first place. Now that we know what the rules are and where to find them, we really need to grasp why they matter so much. Basically, GAAP exists to make financial statements trustworthy, and it does this through 3 core purposes. First up is consistency. This just means that every company applying GAAP is using the exact same rules to record the exact same types of transactions. So the word revenue means the same thing no matter whose statement you're looking at. Second is comparability. Because everyone follows GAAP, you can actually sit down and meaningfully compare different companies' performance and financial health. And third, reliability. GAAP sets really strict standards that have to be backed up by hard evidence. Because of that, financial statements can actually be audited and verified, giving everyone total confidence that the numbers aren't just being made up. And this brilliantly illustrates how those core purposes play out in real life. Let's say a bank is trying to evaluate two different companies, Company A and Company B, for $1 million loan. If Company A records revenue the second cash hits the bank, but Company B records it the moment a contract is signed, well, the bank is looking at apples and oranges. They'd be completely paralyzed. There's no fair way to assess that risk. But thanks to GAAP, both companies are forced to speak the exact same financial language. It guarantees an apples-to-apples comparison. And that is exactly what lets lenders and investors make those confident, high-stakes decisions. Let's wrap things up with Section 5, a formal commitment. This is all about the real-world stakes of compliance. I actually want to shift gears for a second and get a bit serious here, because the stakes we're talking about are incredibly high. When you see the phrase prepared in accordance with US GAAP stamped on a set of financial statements, you have to understand that it's not just a casual label. It's not marketing fluff. It is a formal legal representation and a very strict commitment. It tells the world that every single accounting policy was pulled directly from the rulebook. Every transaction followed the applicable rules, and all the required disclosures are right there. If a company claims this, but actually applies the rules incorrectly, that's a misrepresentation, and trust me, auditors are going to catch it. That leads to severe audit failures and mandatory, painful corrections long before an opinion is ever issued. You really have to consider the massive ecosystem of stakeholders who completely depend on these GAAP-compliant statements. I mean, you've got management relying on them for internal strategy, banks and lenders using them to figure out creditworthiness, investors comparing companies to decide where to put their money, auditors verifying everything is fair, tax authorities using them as their baseline, and of course, your own finance teams who need to apply consistent rules every day. Literally every single one of these groups relies entirely on that formal commitment to make major real-world financial decisions. So here's what I want to leave you with today. Is your accounting a true commitment to the rules, or is it just a label? Now that you fully understand the immense authority behind GAAP, what it is, why it was created, and who's relying on it, I think you can see exactly why that commitment is so absolutely crucial. You've got the foundational ground rules firmly under your belt now, and that perfectly tees us up for our next explainer, where we're going to crack open that single source of truth, the FASB Codification, and look at exactly how GAAP is organized and how the rule hierarchy actually works. Thank you so much for joining me, and I'll see you in the next one.